Hello and welcome to our webinar Spain Tax Blueprint for UX Person and how to move, invest, and launch a business in Spain without paying double tax in each country. My name is Joaquin Torres. I'm a certified public accountant here in the United States. I'm the owner of AGA CPAs and Advisors, which is one of the division is US Expats Tax Relief. I have 31 more plus year experience, and especially with expertise dealing with IRS and Spain tax regulation. I'm bilingual, hablo español, ese es mi primer idioma. I was born and raised in Puerto Rico, was part of Spain before US. And also I have a certification for tax advisory also in Spain. What we do is also part of my experience is also tax planning for people that want to move, especially US person to Spain or invest in Spain. In the next webinar, what you will discover how legally avoid paying tax twice, meaning Spain or US, coordination with the tax treaty. Yes, there is a US-Spain tax treaty, totalization agreement, and foreign income exclusion and foreign tax credit. We will talk a little bit more later on that. And how to master AEAT, which is the tax agency on Spain, and IRS compliance, and how to protect your wealth, your assets, and avoid penalties, which are really high. Let's keep going. This webinar is for you if you are a US citizen or a green card holder and you intend in next days or a couple of months, or you're already investing in Spain real estate or business, or you are planning to move, if you are an entrepreneur, self-employed, planning to work remotely for your business on Spain. And also, if you're already in Spain, you want to understand the complex Spain tax and how to deal with IRS too. And you want to protect. The main reason here is you want to protect you want to avoid penalties, you want to avoid double taxation as well. Why this is matter now? Because it's worldwide income issues here for US tax person, US person. A US citizen or green card holder is taxed by citizenship. So it's worldwide income. You need to put it on your personal IRS income tax return. And if you're moving or living more than 183 days, more than half of the year in Spain, you are considered tax person there in Spain, and you need to include worldwide income too. That's when the things get some complicated. Also, this is matter because the Spanish tax rates can be up to 54%, and you have the risk of double taxation too. Okay. Here's the challenge, the Spain-US challenge. In US, as I told you, you've been taxed by citizenship based, worldwide income, federal tax rate up to 37. Plus, if you work as independent contractor, you will still need to pay self-employment tax for Social Security in US, which is a flat rate of 15.3%. Also, you need to take care of FBAR, FACTA, and some other forms while you are living abroad. Okay. For Spain, you have the residence-based taxation, which is more than 183 days, or you have any other investment there, income there, even if you don't live there. The tax rate are up to 54%, and you need to take care of some other, for non-resident or resident, there are some couple of tax forms that you need to file also too. And there is a wealth tax, impuestos patrimoniales, which mean you can be taxed by the entire wealth that you have worldwide. So there are some exceptions, there are some things that you might need to do to protect that for that wealth tax. Here's another snapshot of US and Spain taxation. We talk about the 54% up to personal income tax, 37% in US. Corporate in Spain, you be taxed if you are a business owner. There will be a 25% versus 21% on US. But consider a US, maybe you are in a state that also tax for corporation that maybe could be 5, 6, 8%. So basically, I believe it's the same for corporate. For sales tax, US based nationwide, there is no sales tax, only on the states, right? But in Spain, you will have a sales tax, they call IVA, a value added tax, which is 21% of basically everything. If you are a consumer, just a person that buys things or service on Spain, you will be paying 21% or 10% or 4%, depending. For example, on the supermarket, basically all stuff in the supermarket are 4%, basically. Other are reduced to 10%, but mostly everything is 21%. If you are a business owner, basically you need to charge to your clients and pay IVA for anything that you buy for your business, or uh, you need to charge to your customer the sales tax or VAT, the value added tax, okay? And Spain, that we talk about that, you tax on residency and all the reporting that you might need to require to both. Uh, what are the major Spanish tax, key Spanish tax words, right? If the IRPF, IRPF, which is the personal income tax, taxes, IS, Impuesto de Sociedades, which is for corporate tax, the value added or IVA, Impuesto Valor Añadido or value added tax, EV, which is property tax, the property tax you pay for your home, your real estate that you pay to the county property appraiser. There is a EV. You pay also to the province, municipality, or the state inside, a local state inside Spain, and they call it the Impuesto de Bienes Inmuebles, which is substantially lower than US. ITP, which is some kind of other taxes for transmission, selling real estate or other assets. And also there is a tax for non-residents, just if you are, for example, you buy first a real estate there, you need to pay taxes for that property, even if you are not living, as you were renting that property. Okay, so that's basically the major tax items for Spanish for Spain. So what are your obligations as U.S. citizen? Even if you move, some people don't know that even if they move abroad, that they say bye bye U.S. and I will not be here for maybe in 10 years, you still need to file income tax on U.S. Right? You need to file your 1040, even if you don't pay your you planning to legally don't pay double taxation. You need to file a FBAR. FBAR is a report that you need to report all bank accounts over $10,000 in any day of the year. Also for foreign financial asset, that means stocks or any other thing that you own from in the foreign. Also, if you plan to do a business there on a foreign country or Spain, you will need to do the form 5471, which is for foreign corporations that are owned by U.S. persons. Also, there is another type of form, which is the 3520 for trust, that for more complex tax studies. Okay. Also, the framework. These are the three pillars for how to coordinate everything. The main keyword here is coordination. Coordination. You need to do your taxes on US. You will need to do taxes in Spain, but you need to coordinate that. The first thing is the residency and reported architecture. Establish a solid ground rules to avoid dual residency. Okay, so that could happen. That maybe you have to file as a resident in both states and have to uh, consider worldwide income in both places. So that's a key point there. And you need to consider a tax treaty. There is a US-Spain tax treaty that talk about many items, including sales, capital gains, income from pensions, social security income, and there is a foreign tax credit, foreign earned income exclusion, which means uh, when you work abroad, work not other passive income, you might request IRS for that income exclusion. But that's some rules that we will talk about later. And also for foreign tax credit. Okay, let's say that you pay taxes on Spain for some income, and since you need to put that on US, you might have a tax credit on US or vice versa. Okay. Also, there is a totalization agreement and self-employment strategy also too. If you work independent contractor and you plan to do that in Spain, you will need to pay Social Security, Seguridad Social in Spain. If you pay Seguridad Social in Spain, you can request to IRS the totalization agreement, request a certificate of coverage in Spain, and you inform and report to IRS that you are not paying Social Security on US. That's a good idea, right? And that's the way to go in order to avoid double taxation on Social Security. Residency and reporting architecture, that's the secret number one, as I told you. That's the residency. For residency, you have these are the tests that triggers the residency. On Spain, 183 days per natural year. Okay, so if you spend more than 183 days on Spain, you are considered a tax uh, uh, person there, and you will need to put all your worldwide income. Economic center, maybe you are not there for 183 days or more. Maybe you just put your wife, your kids, and you travel back and forward to US and Spain, and you say, hey, I will spend less than 183 days. This is my only income for the entire family. Bang, I will not pay anything to Spain because of my business in US. That's not work that way. If you move your family there, that's the size when your family go to school, your sons, your wife or husband living there. So, and your economic center is in Spain, that will trigger also that you will be a resident, tax resident on Spain too. That are the tiebreakers. That are the permanent home, where it is your home, if you're planning to live in Spain and you don't want to be treated in US as a tax resident. Mm, when you fly to US, try to stay on hotels or have your permanent home in Spain, center of interest, everything that you do. And of course, if, Spain also, if you have your Spain citizenship, that might trigger also some tiebreakers for Spanish tax residents. Also, on the reporting, on U.S. sides, apart for the tax return, the foreign return for it, will need to do the FBAR, financial assets, any foreign tax. Also, Spain side, there is Modelo 720 and 721. That's for non-resident. That's maybe apply for the very first year, mid-year that you are on Spain, or if you are just investing there and you might need to file some taxes as a non-resident. And of course, you need to do some coordination. You have different deadlines in both countries, different threshold, different definition also. For the tax treaty and foreign earned income exclusion or foreign tax credit optimization, this is the way that how legally you can avoid pay twice or paid for the same income in both countries. Especially this one is for US. Once you are there on US and you have on Spain, I'm sorry, and you have more than 330 days span on a year on Spain, you can exclude for 2026 will be 132,900. Let's say that you're an independent contractor and you work as a digital nomad in Spain and you earn net income is $90,000. You've been there for the entire 2026 on Spain. So that income is totally excluded if other conditions apply, totally excluded from US income tax, but not for self-employment tax, right? But if you are paying self-employment on Spain, you might be don't not pay anything on US for self-employment and that particular income too. For income below one, that this is good for income below for that threshold at $132,000. And foreign tax credit may be applicable for if you are earning more than that, or you are unable to exclude, or you are having income from dividend interest and you need to pay in Spain for that, you might take a tax credit on US. That's a thing that you need to consider, and we take care of that to helping our clients. So these are other things that are there on the tax treaty. There are some wording, some articles for dividends, interest, royalties, pensions, special rule for social security, and capital gains. Also, we got the totalization agreement, that's the other secret, and self-employment stage. So this is what you're potentially saving, the 50.3% of self-employment tax on US. That will eliminate your double taxation on Social Security, and we take care of that for clients at the time we file their taxes on US. Okay, and this is a real world scenario for self-employment. That's happened for one of my clients. She's a US citizen living in Spain since 2025 and is independent contractor, her own company in US. She built from clients from US and then she takes the money as independent contractor on Spain. She's paying Social Seguridad Social in Spain and her gross income is $60,000 net income, basically. Here's what the potential savings. She will not pay any foreign air income exclusion in US because she lives the entire year there. She will not pay the Social Security, which all add up to almost $15,000. So this is a huge saving for this time. And this is only for $60,000. Let's say $120,000 might be double that. So, okay. So here are some common mistakes that I have seen from clients and or people that don't know, right? They're missing the 183 days. Maybe if you're planning to move there, maybe it's a good idea to move the first year after June 1st, right? To avoid 183 days in the first year. Also, choosing forgot to choose I have another client that the tax returns were made on 2025. They came to us and I amend the return because they missed to do the foreign income exclusion. And this is the thing that usually Spain tax advisor don't know. Or if you are hiring someone there that doing the US tax return, be careful because this is something really specific and you need to be careful with this. And this is where foreign income exclusion and foreign tax credit you will have the most of the savings on your tax returns. And also ignoring the totalization agreement. The totalization agreement is related to the Social Security, not paying, or you pay in US or you paying in Spain. If you live in Spain and you are on Seguridad Social, Social Security, you will not need to pay on US, okay? This is our common example of the myth that I heard from clients or prospective client or friend. If I pay tax in Spain, I don't owe anything in the US. No, the answer is no. You must always file coordination with what's reduced double taxation. No, it's not that you don't file. And the other myth is I will just file Spanish tax and skip the US filing. citizenship base, so you need to file in US, even if you have not been in US for a while. My Spanish accountant can handle everything. Spanish accountant rarely understand US obligations, so you're risking for possible severe penalties. So how we work with clients? This is our fourth stage, basically. We do discovery first. When you contact us, we can do a book your first strategic tax strategic plan for Spain. So we will cover, we will see some discoveries on what is your exact situation right now, what you want to do in Spain. We will develop a strategic to what, depending on your specific personal situation, implement whatever is to create another LLC in US, or maybe some change on your how you handle your assets, real estates, and ongoing year-round bilingual support and compliant peace of mind. We can do this on a package. Usually, it can be monthly, yearly, or every 6 months, and or one-time fee if you just want to do the tax planning. So. Uh, what are our specialized service? Cross-border tax planning, U.S. tax preparation, coordination with Spain, U.S. Spain. We are planning to do Spain taxes in 2027. We are working on that. But in the meantime, I know pretty good the tax law in Spain. So it will be, I could handle with, I could refer to you as a Spain tax accountant, and or I can work with your Spain tax account. I'm bilingual, hablo español. US business formation to plan ahead for your move to Spain. Cross-border bookkeeping, we handle bookkeeping also here in the office. And personalized scenario, right? And so you need to see your scenarios based, and if you move, what will be your income, if you will still receive an income from US, or new income from Spain, or you just retire, and what will be your tax impact on US and Spain. Why choose us? I have a 31 years plus experience. I have been CPA since 1995. I'm focusing, I can work with any US expat, but I'm focusing on Spain and US people from US moving or investing in Spain. I work together with a law firm also and some realtors. We have a group of collaborative professionals that we work together, and we will definitely help you with all the tax matter, legal matters too. I'm fully bilingual, hablo español, fully bilingual, and our team also. And we coordinate with Spanish advisors, anything that we need to coordinate with any particular professional that you have there, and that we need to talk to them. And backed by our boutique CPA firm, which is we offer the full service for our clients here in US and Puerto Rico, and now in Spain too. So, and this is your next step is to go ahead, and if you believe that you are ready to move forward to do any tax planning or prepare your tax return because you already moved there, now is the time to book your initial strategic roadmap consultation. We can do a 15-20 minutes roadmap, so we will see, and then we can offer you a personalized Spain US tax situation, and we can see the roadmap that you might need to follow. Okay, so what you get in your roadmap consultation: comprehensive review, identification of your specific tax exposures, initial assessment, what is the way to go, totalization agreement for any income exclusion. Hey, don't do S corp. Let's on your US business. Let's do another thing. And a recommendation of whether a full tax planning engagement is right for you. And this is for you. you for the initial roadmap consultation if you decide to and you are ready to start your process. This is for you, for a US person, you are serious about getting tax strategy, you want to personalize a guide, you value preventing problems over fixing them. And this is not for you if you're looking for a free generic advice and you don't have a US tax filing obligation and you prefer for do-it-yourself approach, or you are just basically you're looking around or planning to move maybe in 2 years, maybe it's best to go back to me in 2 years or so. If you want to protect your assets, your wealth, and you really are in the moving to Spain or investing in Spain, go ahead and click on the initial strategic roadmap consultation today and fill the initial intake form and to see what is to discuss that when we get the consultation, virtual consultation. I will be really happy to help you. Investor, I have our apartment. We just bought an apartment in Valencia last 2025, and we are really happy. We'll go back and forward. I'm not living yet there, but we are based here in Florida, North Orlando. So I will be definitely happy to help you. So go ahead and click for the initial consultation, and thank you for listening for this short webinar. Thank you.